people to, continue to stream in. But thank you to our audience for joining us. This is the second in our Ramadan night series with new VCs. And it's a pleasure to have with us the founders and partners of Access Bridge Capital, which is a new fund in MENA. And I welcome with me Issa Aghabi and Rakan AlRashed, the co-founders and partners in this new fund. Excited to have them. Rakan, I have met more recently, but Issa I've known for many, many years as one of the earliest entrepreneurs, and we were just discussing in the early 2010s. And Rakan, I know he's been in investing in these businesses for also many years. And now this is their first fund directly together. So, and maybe I'll start by turning it over to you, gentlemen, and ask about your journeys. How did you get to from where you started to starting a fund together?
Yeah, sure, happy to. Rakan, you want to go ahead and tell the guys a bit more about how you ended up here,
and then
link it
and then
in a swift manner.
Excellent. So I started off my career back 2013 in private equity. Spent around 4 years working on mid-cap to large-cap deals, based out of Dubai. Spent some time as well in South Africa. Traveled through Dubai and London for about 4 years. After which decided to leave the private equity space as the VC has started to emerge in the region, where we started to see the growth of and the emergence of the Kareems, the Souks, and have decided to co-found an investment vehicle and started to invest in this space in GPs with managers, and as well investing directly in startups, and spent about in that until let's say late 19, in which during that period Issa and I have started to invest overlapping in some of our investments, and we started to get to know each other, and we always had these chats, small chats of what do you think about the space, what's missing, what needs to be done, and that was extremely helpful, where at the end of 19 we've decided hey, how about we look at the early stage space together and maybe collaborate and start something, and maybe I would give now Issa to continue.
Thanks, Rakan. So yeah, I have a bit more gray hair than Rakan, so take that with a bit of a grain of salt. So I started off my career in investment banking, but transitioned fortunately, really it was a fluke, into the venture capital space in 2006 as one of the first team members of a fund back then. Most of the people on this webinar or broadcast probably won't heard of it, called Accelerator Technologies. It was one of the first funds in the Middle East. We created a co-brand called Ivy Holdings. Doesn't exist anymore. The brand that they go by now is Silicon Valley. So I was fortunate enough to join around 2006. Since then, I've had numerous roles across the venture capital spectrum. That includes some M&A work for Yahoo when they were in the region. I ran a venture builder that used to be called N2V. It doesn't exist as in that capacity anymore. I was the head of investments for a sovereign's entity in Abu Dhabi called 2454 for around 5 years. And the last role I had, ahead of partnering with Rakan and the team to launch Access Bridge, was the head of investments for IFC in the Middle East, North Africa, Pakistan, and some parts of Europe.
So in fact, you were both writing checks to VCs before you launched your own VCs.
So it was both direct and indirect. Indirect being giving money to accelerators, fund of funds, and direct being investing in larger or later stage startups. So with that collective, experience, I've probably done around 65 transactions, of which let's say 10 to 15 were funds, so fund-to-fund investing. So invested in the likes of Beko, Wamda, Algebra, Flat Six Labs, just to name a few, Sarmaya Car, Iptikar, the list goes on. And that's actually the first overlap me and Rakan had. We co-invested collectively in Beko's funds, so we're part of the LPAC members there. And that's how we built that relationship. So that was checks of everything from 100K in the startup space up to $25 million transactions. Over that period, before launching Access Bridge, managed over like $150 million in venture capital funds. Actually launched an accelerator back in the day, a Flat Six Labs Abu Dhabi at 2454. I've had around five exits. I was luckily fortunate enough to be part of the team that helped with the exit of Stoop to Amazon when I was at IFC, Visita to Gulf Capital, SAE to Zero Bridge, our sister fund and our partners in this fund, Intaj to Ericsson, Mum's World, and so on and so forth. So alhamdulillah, I'm very fortunate. Plus, with my N2V days, had some operational experience of running companies across Saudi, Jordan, and the UAE. So with that shameless PR out of the way, we put our minds together. We saw a gap in the market that we can talk about in a second, I guess, and decided to take that plunge or that leap of faith and put our money where our mouth is. And
tell us about that. Tell us about that gap, because one of the things that we're seeing right now is a lot of funds. We were discussing this before we went live. There is a lot of funds in MENA. Does MENA need yet another fund? And well, I'm not going to ask that question, but rather I'll ask more importantly, what really differentiates your fund from the so many funds that are out there today? What's your thesis and what really makes you special?
So again, Rakan, you know me, man. I speak a lot, so stop me if you want to jump in. I like to blab. So I think what the opportunity and what makes ourselves different, I think, are two different questions, right? So as a collective, we try to bring a different breed of venture fund to the region, a fund that is a very early stage focus. So we try to do pre-A up to A in certain cases. Obviously, the landscape keeps changing and the labels keep changing. Seed used to be a few $100,000. Sometimes now it's tens of millions. Who knows in the next few months? But generally speaking, we like to do early stage investing, pre-Series A. We are not shy of leading deals, right? So that is something that you struggle in this part of the world when it comes to early stage. We're price sensitive. We're very disciplined in our approach. And very importantly, we are exit-driven investors. So we are commercial investors. So we will roll up our sleeves, invest in really strong entrepreneurs and company with the aim of growing them and making that first 12 to 18 months of our involvement, we do get involved. As we say, as much as the entrepreneur wants us, and you can ask the three investments that we've made since we've launched in January, how involved we've been. So we really try to bring that value add, that unfair advantage to the table. But more importantly, we are a team that know what we're doing. So we do have end-to-end experience in the value chain, everything from deal sourcing, managing, exiting, operational experience. And more importantly, we've built and ran startups collectively, individually as a team. So that's really what differentiates us, and what we try to do to add to that concept of unfair advantage, really bring our overall stakeholder network to the equation. So either it be our investors, our team, our sister fund and its portfolio companies, Rakan's spectacular network, my network across the value chain, and really push that onto the startups. And we have so many case studies of things we've done over the past few years as we've launched this fund, and more recently with our companies to help elevate their value and that value add that we bring to the table.
Yeah, and I think, value add is extremely, let's say it's a vague term, right? Because many talk about value add, and what is value add, and what do entrepreneurs really need? And I think what's important as well here is that as much as VCs come with their network, with their experience as well. On the other hand, you need the entrepreneur to be open to that, and especially when it comes to what are their needs, what is required, and what do they exactly need from from VCs, and this is something that's really important. Once we do like entrepreneurs who are extremely clear with us. Listen, guys, we need this and that from you, and how can you help us in this area or in that? And where at the same time you have someone just really just try to.
So I think a testament to that,
right?
very quickly, is we actually embed this in our DDQs and our term sheets.
Yeah.
So there is a specific section. What do you need?
Yeah.
How can we help? How can we extract value from our wider network? It works in certain cases, in others it doesn't. We promise to try our best. And I think the next few years of our life as a fund will showcase that. And I think the first 3 months have been positive enough that not only are we getting referrals from entrepreneurs that we've invested in, but entrepreneurs that we've said no to.
Well, sounds great. Can we talk a little bit more about the sectors? We know about the size of deal that you want, or the stage that you want to enter into. And I know that everybody wants to be sector agnostic. I've heard definitely before. I'm emptying the answer pool before we get to it. That we invest in everything. It's all about the startup. Everybody is bullish on some sectors and bearish on others. At least, from their past experience, what sectors are you bullish on? What sectors are you bearish on?
I mean, let me hit that first. Maybe I think something we really need to have to acknowledge here, Omar, is that you need to look at the ecosystem, right? If you look at the ecosystem as a whole and how this ecosystem is emerging, I mean, I think we are not in that place to be a sector-specific type of focused VC fund. However, what we like and what we talk about all is about pattern recognition. What has worked, what has been proven successful elsewhere in terms of different regions, different parts of the world, and how could we apply that to our region, and specifically in the MENA and Middle East, and what are those patterns and what are those sectors that are really you need someone to solve the problem there.
I think just building on that, and now to actually hone in on some of those examples, I'm going to put them in four buckets, right, instead of sectors. The first bucket, let's say, is a combination of health tech and education. And bear with me for a second. Why? So these buckets are specifically tailored to our value add concept. So these are buckets that we know, buckets we understand, and each one of us as partners have value add or an element to help expedite and grow and scale these businesses in those sectors. Healthcare and edutech, that's the bread and butter of our sister fund, Cedarbridge. So they bring a lot of value add there and a lot of fun. They're in the same bucket, honestly. And please don't get upset with me, entrepreneurs, is the amount of deal flow that we see in that space is quite small and limited. So we put it under that bucket. The second bucket, I would say, historically, I used to love e-commerce. I've done a lot in my career. I think we are less bullish on e-commerce. I think that market's quite well served. E-commerce enablers and marketplaces are areas we like. So, for example, the second deal that we did in our fund is a company called Flexstock. This is a warehousing on demand play that fulfills that e-commerce enablers, businesses that help elevate e-commerce, expedite processes. That could be logistics, delivery, and the list goes on. I would say the third one is fintech. I think that is still one of the most served yet still underserved areas in the Middle East because of the challenges of launching and scaling fintech. And as example, we did Kastana in Egypt, and we currently have 2 term sheets out for a couple of fintech companies, one in Pakistan and one in the UAE as well. And the last one, I would say, enterprise tech, SaaS, anything that helps digitize processes, cut costs down, get businesses offline, online, and so on and so forth. This also drives with our value add through our retail experience. And from a fintech perspective, that's something I've always enjoyed doing. And Rakan has a lot of experience in e-commerce and marketplaces also. So again, there is that concept of pattern recognition, spotting early patterns and finding the right entrepreneurs early on, but also buckets that we understand and can add value to. هلا طبعا if a superstar business comes to me in another sector, I'll take a look at it. Like I've done a lot of gaming investments and burned my fingers, yet made money in some of them in the past when I was at 2 for 54. I've done a few other random sectors in such as energy and whatnot for me when I was at IFC. But again, we will still look at everything, but this is where you would extract more value from us, and naturally we'll elevate more towards these buckets.
Great. I think that's very clear, and it's compelling also vis-a-vis what you said is your strengths and the thesis of the fund. I want to shift gears here a little bit. I want to move to some short questions. They're a little bit more light. They give you a chance, they get the audience to get a chance to get to know you. They're a little bit fun, but I just ask you to keep your answers down to 30 seconds, especially because there's two of you. And most of them will be pick one or give me the top. So the questions are phrased in a way that it makes it easy for you. So I'll start with, what is the number one, what is one thing that will make you immediately dismiss a startup? Get out of my office.
Rakan, go first.
I would say late to a meeting.
Late to a meeting. Ooh, that's a good one. Okay.
Yeah.
Issa, you have to give a different.
Bad team.
Bad team. What does that mean?
So a team that is not cohesive, not on the same page. The co-founders are not aligned, and you see that a lot sometimes. Especially at the stage we invest in, you need to be quiet. You need to gel very well together for us to invest in you.
Great, great. What is the number one challenge that entrepreneurs underestimate?
I'll go again. Opening new markets.
Opening new markets, cross-border expansion. Okay.
Estimating timelines properly.
Yeah.
People tend to be a lot more aggressive than they can actually deliver. Some may, but some, a lot of them don't.
Okay. Tell us about a regional company that our audience might not know about, but that you think is a unicorn in the making. Preferably something really that is under most people's radar, so that it's something that they can learn about from you for the first time.
Oh, that's a tough one, Omar. We don't want to make anyone upset.
Well, I can be biased, right, and give them one that our sister fund invested in. Schedule.
Okay, but that's one that everybody, it's got a lot of exposure. Give me something that people know less. I'll make it broader.
Flex stock.
Sorry?
The investments that we just did. Flex stock, Casbana, there are two that we feel. Spiro.
Okay, let's ask that question again. Give me an early stage global company that you think is really interesting. And why do you think it's interesting? What does it tell us about a key trend or thing that's going on in the market?
It's a very good question.
Why, thank you.
I'm drawing blanks here, but I think Stripe, I would say. But that's a unicorn. That's a global business. That's not a small startup. I think something along those lines in MENA, and we're seeing a lot coming out, could be a force to be reckoned. Does that answer your question? I hope it does.
Kind of.
I think it's going to be in the fintech space. Let's say that. Someone in the fintech space.
Plaid, Robinhood, the list goes on. I think there's a lot of fintech opportunities that we are underestimating here. And the region that I've yet to touch upon.
Yeah.
Okay. What is the biggest challenge facing the regional startup ecosystem? And I'll give you some options, or you can always pick something else. Talent, funding, regulation, access to customers or markets, etc.
I think the answer to that depends on the market you're in. Right now in Saudi, I think talent is one of the biggest challenges they have. There's a lot of startups, a lack of talent to help support them grow. So we have startups that are struggling to fire C-level management and so on. From a fintech perspective, I would say it's regulation. That is the single most challenging element, and will keep hindering the ability of companies to scale.
I don't think I agree with that, and I don't think funding is an issue, because funding with the right team, with the right talent, funding would definitely be there. So today, I think we are in the best position. For any entrepreneur, today is the best time to raise money, I think, with the right team and right talent.
Does that mean you think there's too much money in the market, Rakan?
Well, I mean, that's again, depends on the markets, but there's definitely enough money for the market to absorb, and I think I would encourage people to go ahead and do a startup.
Now is a great time. There's a lot of dry powder. Okay.
Absolutely.
What is a common mistake that entrepreneurs often make when approaching investors?
Well, I think one trend that we're seeing a lot of nowadays is because of the mismatch of demand and supply. The fact that there is less supply than demand, there is more demand for startups than there is supply, overvaluing your business. And this is a global trend right now. It pushes funds like us to do earlier than what we'd like to, just because to catch these entrepreneurs early on, because we try to be as disciplined, but people are significantly overvaluing the business. And some VCs don't mind that, especially the ones with a lot more dry powder than us, because they keep doubling and tripling down at large levels. We like to come in, get enough, and if we have conviction in you, we will bet big at the beginning of the value chain. And price is important. It's not the main driver, but we've seen some crazy stuff lately. That's part of the ecosystem and the ups and downs of that previous discussion that you have of ability access to capital and funding.
Rakan, thoughts on this one?
But listen, I think what's important here, and in terms of valuations, I think, and this has always been a problem where they should be reflective of the region and the addressable market that the startups are in. And I think today, some entrepreneurs are misguided with global trends and valuations, and that's something that is, entrepreneurs really need to consider and think about before approaching investors.
Okay, great. I guess my last quick question, and then I'm going to take some questions from the audience. Tell us about a business you lost money on. Or if you don't want to tell us about a business you lost money on, tell us about a failure and what you learned from it.
That's obviously in this space, and and many everyone here probably knows that this space is quite a risky space. It's one of the, let's say, riskiest in terms of the asset allocation kind of perspective, the spectrum of business. And we've in many cases we've lost some investments in one particular in the logistical space, let's say, where we have a lot of the team is promising, the idea is promising. However, once where there are bottlenecks in terms of the regulation, and underestimating the market itself versus the Aramexes or the space itself, where it is really requires a lot of money to be deployed. So these things, these learnings are really important to really understand. Each market you get yourself into, as much as the idea is fantastic, as much as the entrepreneur is strong, you still need to really understand this sector inside out, and whether this sector can be disrupted and penetrated or not.
Clear?
I have so many examples for you, but
many.
Pick your most spectacular one.
Not most spectacular, but one that resonates was, man, there's so many, but not negatively, but that's how I learned, right? That's how I became a better investor and so on. Especially the first 5 to 10 deals I did were a bit of a catastrophe. But I would say one that I really was hopeful about was a company called Nebras, which was doing B2B learning when e-learning was not a thing, focusing on banking, interpersonal skills, and so on. They had an amazing content repository, but had challenges selling that content. I think the learnings there is, make sure that you have the right CEO for the business. The CEO was great, but he was not the best to run a business. He was more supporting from a business perspective, and having that right layer of C-level management to be able to push that forward. And we learned that the hard way. But in other cases, Souk is an example that's not losing money. Actually, no one lost money because everyone has strong downside protection, but also that is a learning from how there was a mismatch between early investor and later investors that led to an exit, right? That could have been a lot more valuable if the process was managed differently. Say.
This is the untold story, because everyone talks about the massive success of Souk, but I think there's a more nuanced story.
I think Souk was a spectacular success. Let's not negate what it's done. I think how many people have graduated from that business? The entrepreneurs that are seeing have left that.
Oh yeah, don't get me wrong. It's certainly a success.
But I think with every success, there's a lot of hard paths that need to be taken, and that exit was one of them. I would say a lot of people were happy. I don't think anyone was upset, but I think a lot of people could have taken a lot more off the table if things panned out differently. And again, I can't take credit, or my involvement there was limited because I was inherited that deal when I joined IFC. We were part of that exit, but we didn't have enough to even influence that back then.
Great, thank you, gentlemen. That was really fun. I have some questions from the audience, and welcome the audience to ask any more questions as we round out our time together. One question: do you invest in Iraqi startups? Another is: what is the minimum traction you expect to see before you consider investing? These are two questions for you guys right now.
Yeah, Iraqi startups. Yeah, we're open. We're pan. So our core geography is Middle East, North Africa, and Pakistan, and Iraq is obviously part of this. So yes, is the answer. I think in terms of traction, it really depends on the business and the sector that you're in. Every business has different types of traction. Some is revenue, some is users. For example, if you take a marketplace into play, we'd like to see if the marketplace out there with actually supply meeting demand and transacting to showcase that this marketplace has merits. So that's an example of some traction, but it really depends on the sector that you're in.
Okay, but so the phase that you want to see just some customer traction. You don't need to see necessarily revenues. You don't need to see.
We need you to showcase that this business and the concept that you're trying, or the problem that you're trying to solve, has merits to it. So basic traction from a customer acquisition, unit economics, transactions, whatever that means for you. What you measure success, I want to see some traction when it comes to what that measuring success is. So for example, if you're like an Uber or Swivel in the region, having key routes out there, understanding what the more optimal routes are, and some transactions take place, showcasing that this works and there's a demand for it. If you're a schedule, actually people paying for you or using your SaaS platform and it's successfully out there, not necessarily selling it, because we know that platform was not selling, it was doing it for free for the first period of their life. But really, traction is very bespoke for a startup, I would say. And we will tell you early on in our first half-hour chat what we think traction means for you, and you can correct us if we're wrong.
Okay. Great. I guess I'll ask a last quick question. If you have feelings that the startup is not performing as expected, how do you respond to this? Deploying new employees, or always believe the founders until either success or fail? When do you pull a founder out or try to replace them with a CEO? And or what do you do when a startup is not performing? I think these are both really good questions.
That's a tough one.
Yeah, and it's a great one.
Actually, I've had an incident in the past 6 years with the whole CEO one. So I invested in X startup. I'm not going to name it because it's still out there and doing well right now. And in my 6 months to a year in the business, in one of the board meetings, I suggested that the CEO step aside. Not because he's bad, but again, learnings from the example I had before, is he was not the best person to take this business to the scale that it needed to. He is someone you definitely need in the company and a very, very important integral part of it, but not the CEO. Let's say he is another level of C. That was not taken very lightly by the team, this is the founder, nor by the other investors. 2 years ago, the CEO stepped aside in another role, became the chairman of the board, and a new CEO was brought into place, and the business is scaling. So we're not shy to tell you what we think. End of the day, we invest in people, we invest in teams, and we invest and we trust them. One thing that we think about when we're investing in individuals, if this business sidelines, if this business fails, will I still invest in the same entrepreneur again? And usually the answer should be yes, right? So we trust entrepreneurs and trust people. Is it our role to come in, bring new management, flip things around? We haven't had that situation before, because these companies that we invest in, it's not just us on the cap table. We're early investors. By the time these problems come across, it's probably a year or two in, and other investors have come to the table. So it's a collective decision and discussion that takes place. And usually agreements are drafted in a way to help protect and allow for those discussions to be had. Great. I thought that was a very diplomatic answer, I have to say.
I think what is also important is that, you know, alignment of interest, Omar, because at the end of the day, not us and the investor nor the entrepreneur wants this business to fail, right? So as long as you have that great relationship with the entrepreneur and, you know, the desire for this to work, you know, we've been in many situations in boards that, you know, have you know, different views or ideas about, you know, the management. So I think it's really important to address that alignment of interest and not really going at war against each other.
Clear, definitely. The entrepreneur and the VC should be on the same side here, and positioning it as a war is really kind of unhealthy. I guess I'll ask my last question before we wrap up, which is, how do you see exits developing in the region? One of the challenges for many of the companies that we're seeing right now, especially the later stage companies, is that they don't have many options. SPACs are now this new opportunity, and we're seeing, you know, entities like Aghabi that choose to take that route, but that's partially because there are not that many other options. Family offices have not been active in the acquisition space, neither of corporates, neither of the global startups. So we're just would be interested to hear what your thoughts on the evolving exit opportunities.
I think it's the exit opportunity in the region is drastically improving. I think where we are now, even with COVID, we're seeing a lot more than we have in the history of VC in the Middle East. So I think day in, day out, things are improving. I think you're seeing a lot of trade sales as opposed to anything else taking place. And I think that trend will continue, either it be international players wanting to enter the region, the complexity of the region and how convoluted the markets are, to give that as a bit of a shortcut. But I think you'll also see a lot of trade sales from existing local conglomerates who want to digitize and expedite processes. So I think automotive, I think we'll see a lot more of that over the coming years and so on. But also above and beyond that, we saw the first, let's say maybe 1 or 2 IPOs within the tech ecosystem in the Middle East. So Fawry being the first. People keep negating that, but like, I don't know, Fawry is listed and is valued off, I don't know what the latest numbers are, but last I saw was around $2 billion. Yeah. Network International, although it may not be your typical VC play or the PE play, but also a company that got listed. So I think we'll see a lot more of that as markets start maturing. And I know Saudi, the UAE, and Egypt have always tried to provide a liquidity market for that, but haven't seen that progress yet. But I would say, because of the hype and what's happening in the region, for us early stage investor, we're seeing a lot more secondary market coming up in the region that didn't exist. So 3 of the past 6 exits that I've had have been secondary trade sales. It's crazy. I've actually had a business that the business was so profitable that it bought back half our shares at a 3 or 4x premium. Wow. So you're seeing innovative approaches. I think the latter is a bit of a one-off, but I think trade sales, secondary trade exits are becoming more apparent. Like, especially when you're hearing that rounds are 2, 3, 4, 5 times what the strike.
Rakan, you know, as a member of a family office, I'm curious if you see the families getting more active in this, because historically they have not been. and they haven't really had an appetite to acquire. Even many of the family offices I hear telling me, we would rather partner with a Western company than invest or acquire a local one.
Yeah, I think that still remains let's say a challenge. We still have see that a lot of family offices are hesitant to deploy in let's say in the region, and I think because they haven't seen, some of them don't understand the space quite well. I think there's a lot of education that needs to happen in that spectrum. However, we see a lot of pioneering in this space, where you started seeing a lot of CVCs coming up that are gonna focus on later and growth stage, and I think that is quite important. As we see now, a lot of startups are getting to the B to the C level, and post that are struggling to raise furthermore. And that space and that level and that stage, I think we're seeing some corporates coming into, and which makes sense, because many of these have requirements, would like to see that enough traction, they have visibility, and as well enough powder for them to to burn, and have already proven, and they already can see profitability. And once we see that coming, and that will definitely encourage more of these family offices to come in and really be part of the ecosystem.
Well, I hope that we will see more and more profitable companies, as you're saying, and more listed companies, as Issa is saying. Gentlemen, thank you so much. I really appreciate you taking the time to join us. Audience, thank you very much for joining us as well, and glad that you got a chance to hear more about Access Bridge and the work that they're doing, the investment thesis and the activities that they have planned. And we hope that you'll join us on Wednesday, same time, same place, for our next session. Meet the rest of the new VCs that have launched recently in the MENA region. Thank you, everyone, and have a great evening.
Thank you very much.
Ramadan Kareem. Thank you so much. Bye-bye.
Bye-bye. Bye.